Every week in my office, I have invited students from across the United States to share their stories about private loans and what happened to them. I want to tell you one of those stories this evening. This young lady came to testify before my committee. Her name is Danielle Jokela. Danielle is a constituent of mine, lives in Illinois, and she appeared when we had a hearing on the looming student debt crisis. The odds were against Danielle. Both of her parents were high school dropouts, but because of the personal value education has for her, Danielle was determined to go to college. Not unlike a lot of young people these days, her family couldn't help her. She had to do it on her own. In the year 2004, she moved from Minnesota to Chicago to attend the Harrington College of Design, a for-profit institution owned by Career Education Corporation. Before I go any further, let me tell you the story of Career Education Corporation. November 1st of last year, the CEO of Career Education Corporation resigned after it was disclosed that this for-profit school had filed fraudulent information with the U.S. Department of Education about the number of students who were getting jobs after they graduated. It was such an embarrassment to the corporation that he was forced to resign. The parting gift for this embarrassing situation was a $4 million parachute to the CEO as he left the Career Education Corporation. He failed in his job and got rewarded for it. Now let's go back to Danielle's story. She didn't fail. She kept going to school. She fully trusted the staff at Harrington to help her with financial aid. They helped her fill out all the financial aid paperwork for her loans and made phone calls on her behalf. There was no discussion about interest rates and what the actual debt load would be by the time she finished. School employees never talked about monthly payments once she graduated, nor did they tell her about the kind of salary she could expect to earn on graduation, or the percentage of graduates coming out of the Harrington School of Design that actually found a job. In 2007, Danielle graduated with a Bachelor of Fine Arts in Interior Design. You can imagine how proud she was, coming from a family where no one had finished high school. After graduation, she started to pay back the following amounts that she had to borrow to graduate: $37,625 in federal loans and $40,925 in private loans. Danielle owed $79,000 when she got her bachelor's degree in interior design. Today, 5 years after graduation, she still hasn't found a job in that field. And she now doesn't owe $79,000. She owes more than $98,000. Those loans just continue to grow. She makes one combined payment each month of approximately $830. Nearly 28% of her current income goes to student loan debt. 25 years from now, 25 years in the future, if the interest rates hold where they are, she will have paid nearly $56,000 for her federal loan, which started off at $37,000, and nearly $155,000 for the $41,000 private loan. Approximately $211,000 she would have paid 25 years from now on her $79,000 debt. That's a staggering 264%. Mr. President, do you believe any college student could even understand when they're signing these loan forms what they're getting into?